Hey, everybody, it's Eri from Tokyo. This is your cryptocurrency update from Japan. And don't be one of those shoppers that run out of the store when everything goes on sale. Bitcoin, yes, dipped below that $80,000 support down to 78,355 today. And, well, it's created some amazing entry points. For example, Flare was off 22% on the 7-day, XRP down 10% on the 24-hour, SWI off 11%. In the top 100, where you find these tokens that have massive global support, Chainlink, I don't own it, but wow, look, it was down 26% on the 7-day. Dogecoin down 27% on the 7-day. Cardano slid 25% this week. Yeah, these are just amazing values. XDC, surprising, showing amazing strength, only fell off 5% on the 24-hour and 11% on the 7-day. Yeah, very impressive. Bitcoin dominance, it's below 60%, not often seen, and it's due to the 18% drop that it's had on the 7-day, much higher than the 7.5% that the total global market has seen. I love numbers, I love stats, and so if we compare today with the fear index pegged at 21, we can look back to March 12th, 2024, when we had extreme greed at 92. This is the range. This is typical. This is crypto. If you've not been here for a lot of these major swings, well, get used to it. This is where you make the wealth in the times when the streets are bloody. I'm telling you, this is the time most of the seasoned people in crypto are having the best time, because this is how you grab that asset that you've been spying on and you really wanted, but you weren't willing to get in at the entry point at which it was just a couple of months ago. So do always have dry powder on the side, and do always take advantage of these situations. Otherwise, you're just bouncing up and down like a roller coaster, and it plays with your emotions, and you're not taking full advantage of these swings. In today's video, I have a treat for you, some curated clips from Ripple's CTO David Schwartz, who was at ETH Denver. And it was uploaded just 10 hours ago, and it has fewer than 25 views. I'm always fascinated to listen to David when he speaks, but this is a particularly interesting video if you own XRP. Now, if you own Ripple, and I'm talking about the pre-IPO shares, then you want to know everything that's going on with Ripple, because Ripple is going to build, I think, the next Amazon of the digital asset world, the financial world, the DeFi world, the custody world, the tokenization world. Yeah, they're doing it all. But if you're an XRP holder, not everything Ripple does, in fact, most of what Ripple does doesn't apply to the XRP holder. This video is talking about the future roadmap of the ledger. We're talking about the public ledger. We're not talking about a custody solution that was acquired by Ripple and that also won the DeFi Platform of the Year award. So they have their own separate business. I am always trying to concentrate and focus on what's going on with the public ledger. This video has it. You're going to enjoy some of those clips. Also, a correction was sent to me. I was given a DM from the founder of Swan, who was really the talk of the town yesterday, about taking financing from Ripple. And as a Bitcoin maxi and a very public Ripple hater, it was spread all over X with this Blockspace article. Well, the article had it half right. You'll see the document I will show you, but this document was not followed through. So we're going to read what he has to say about the article that was put out there by Blockspace. And also, yeah, I found a project that I've identified as having great potential. First, I want to point out a new answer about ISO 20022, the token compliancy, and it's coming from the ISO body itself in their new Q&A. So I want you to understand that XRP, Algo, XLM, HBAR are as compliant as Doge, Bitcoin, USDT, and Trump coin. Yes, a blockchain has nothing to do with being compliant. You can read here at the bottom that at the protocol level, blockchains themselves are not inherently ISO 20022 compliant. Ripple software is compliant. And as you know, they have used 20% of the issued USDC stablecoin in their payment flows. So don't think that XRP has an elevated status and is a so-called compliant coin, because it's just not true. So let's quickly get to what Corey Clipston, the founder of Swan, sent me. And this is in regards to that money that he supposedly took from Ripple. Back in 2023-2024, Swan was contemplating a transaction, which I've got a copy of that documentation, with a third party that would have involved assuming the third party's legacy debt to Ripple. But the transaction never closed and is no longer being contemplated. Okay, let's break down these clips from David Schwartz, who was, again, like I said, at ETH Denver. The chain, and I'm talking about the XRP Ledger, is a little bit different. It sits between Bitcoin and Ethereum. Have a listen.
So the XRP Ledger is a little bit different. It's sitting somewhere sort of between in functionality between what Bitcoin does and what Ethereum does. It has more functionality than Bitcoin. Bitcoin, really all you can do with Bitcoin is move Bitcoin around. Ethereum is a full Turing complete smart contract platform where you can do almost literally anything. And there's advantages and disadvantages of both approaches. The XRP Ledger kind of sketches out a middle path between those two. So it has fixed function transactors that perform functions like a decentralized exchange, tokenized real world assets, automated market makers. We're working on technology for things like lending pools, and so on. The difference is, if you have a smart contract, you have the problem of having to develop the smart contract, you have the risk associated with bugs in the smart contract, and users don't necessarily know what they're agreeing to when they use a smart contract. I'm sure you've all familiar with All My Apes Are Gone, where someone wanted to do something that they needed to agree to a smart contract to do, and they couldn't audit the functionality of that smart contract. The XRP Ledger doesn't implement its functionality through smart contracts, and so doesn't have those risks, but doesn't get those benefits either. So we're doing two things to try to sort of ease that trade-off. One of them is the EVM sidechain, which is an EVM chain that supports, the same smart contracts as Ethereum does. So if you want to do something that's easy to do in a smart contract, you could just deploy it on the sidechain and get all that functionality. But you have the downsides of that too. You have the divided liquidity. There'll be multiple DEXs that will each have their own liquidity. There'll be cost, transaction speed, and the need to agree to smart contracts to use it. On the XRP Ledger side, to get some of the benefits of smart contracts without some of the costs, we're looking to add programmability sort of at the margin. So if the automated market maker almost but not quite does what you want, or you want to issue tokenized real-world assets, which the XRP Ledger supports, but you have some unusual way that dividends are distributed, you'll be able to use smart contracts to provide additional functionality where you need it without having to have yet another chain that has a full-blown smart contract implementation with all the disadvantages of that.
But in weighing the pros and cons, the new expanded flexibility gives builders the option to choose. And I think that is very important to have the XRP Ledger grow.
The EVM sidechain is new. It's currently still in testing. It's going to go live pretty soon. But they will be two separate chains. There'll be asset portability between them with the Axelar bridge. As for how the future goes, I think what will happen is they'll complement each other. So asset portability will be pretty good. So you won't have to feel like if you pick one, you're cut off from the other. You'll be able to, if you have an application that really needs a smart contract because you have very specific functionality that's unique to your use case, you'll be able to launch it on the sidechain. And if you have a use case that's sort of more in the 85% of mainstream use cases, like everybody wants a DEX, everybody wants automated market makers, everybody wants to issue NFTs, everybody wants loans, that functionality will be on the XRP Ledger. And then the market will decide, where the value and the activity is, but developers will have both options and will choose whatever's a better fit for their use case.
I see the XRP Ledger really becoming a boutique ledger because it's going to solve the almost fit use cases, as David says. And the enterprise DeFi is going to come first, with retail coming in the next couple of years. Ripple sees the enterprise use case front-running the use cases for retail. Have a listen.
I think in the short term, the programmability on the XRP Ledger will solve those almost fit use cases. I don't see the XRP Ledger evolving into yet another smart contracts platform that has the same advantages and disadvantages and targets the same use cases as everything else. I think the XRP Ledger is going to stay focused in the short term on enterprise DeFi, and then over the next couple of years on all the retail use cases that enterprise DeFi will enable. It's kind of like what happened with stablecoins. Stablecoins are an enterprise product for enterprise customers directly. Like most people here, anybody here who's used USDC, you probably didn't get it from Circle, right? You got it from an exchange, or you got it from a decentralized exchange or something. So I think those same things will happen. These enterprise use cases will enable DeFi consumer use cases, and I think that's where you're going to see the XRP Ledger focusing.
And with those enterprise clients, listen to the additional functionality identified for enterprise use cases that will be essential. Here you go.
We're looking to make that functionality better to enable some greater functionality based on what we're hearing the partners would like. One of the big things is better support for decentralized identity, especially for a smaller issuer. It's kind of tedious if you have to check everybody's identity yourself and you have to retain those identity documents. So we're looking at support for decentralized identity. We're looking at better support for things like, well, I have this tokenized treasury, I want to use it as collateral. And so we're looking at sort of adding more functionality to supplement those enterprise use cases.
I'm really focusing in on stablecoins. And so the thoughts that David has on the RLUSD and the reasons why this stablecoin will be used is interesting.
I hope enterprises will come to appreciate the fact that it's launched through a New York State trust, which I think is about the gold standard for anchoring a currency to the US dollar. It's Ripple's been in the blockchain space for a very long time now. We have a solid balance sheet that backs the things that we do. So I hope that people will see it as a solid option and find that it's competitive to things like Tether and USDC. It's early days, the market is growing. I don't think we necessarily need to try to compete to take market share away from other stablecoins. I think the space is growing. I think as long as there's good availability and people are confident that it's pegged, I think it will gain market share, again, because I think diversity is extremely important in building something that really is a decentralized experience.
If we want to take over finance, and I'm talking about online, on-chain finance, we need to build the boring stuff, David says. I think he's right. And porn, gambling, gaming, and collectibles, yes, that has been the bubbling up of use cases that have been popular, but as he reminds us, the path to where you want to go isn't always a straight line.
If we want to take over finance, we need the really boring, I need a checking account, I need a savings account, I need a retirement account, I need a stock portfolio, I need sensible investments, I need the equivalent of certificates of deposit. We have to build all the boring stuff, and enterprises are what's going to make that possible. So the strategy is, over the next 1.5 to 2 years, bring in the enterprises with these features around tokenized. They're going to do it for dumb reasons. Some of them will be visionaries, some of them will see this vision and they'll come to blockchains because they understand that it's like revolutionizing finance. But a lot of them will be here just because it's cheaper and faster and it works on weekends and it has these tiny little advantages that are better is better, right? If I go to you and I say I have something better, you don't have to believe me that it's going to change the world. It's enough for you that it's better. And then hopefully in 1.5 to 2 years, we can really turn that corner to sort of mass retail adoption because we'll have more than just, porn and gambling and gaming gaming and collectibles. Not that those things are not nice. They're great. I mean, I understand the path to where you want to go is not always a straight line, right? Like the internet grew on, well, porn and gambling was a significant fraction of the growth of the internet, but today we use it for everything, and so the path is not always a straight line, and I don't think it's as indirect as that, but I think like the boring enterprise adoption is what we're going to need if we're going to get that retail adoption.
And finally, David's vision for the XRP Ledger. It's not going to be everything to everyone.
So I think long-term, the XRP Ledger is it's going to be something specific. It is not going to try to be everything to everyone. I think Ethereum, to some extent, tried to be everything to everyone, and by many metrics was more successful than the XRP Ledger. I'm not knocking it. I mean, that's a great model. But the XRP Ledger is is a little bit more focused around specific use cases, and in exchange, it's faster, it's cheaper, it scales better, and you don't have that risk of agreeing to a smart contract where you don't necessarily know what it's going to do. And I think it's going to retain its identity, and I think it's going to target the sort of mass real-world use cases that are going to drive volume. So, for example, NFTs happen first on fully programmable chains, because someone could write a smart contract to implement an NFT, and they can get an implementation very, very quickly. The XRP Ledger tends to be a little bit slower because there's a curation process by which it has to be adopted as a function, but when those functions are adopted, they're best in class.
And to close off this video, just a minute and 35 seconds about a project that I've identified as having great potential. This is Minima.
Because every device effectively mines its own transaction, there are no miners or stakers to have to pay to validate and to secure that transaction, which means that there are no fees to pay for transactions. We do have a small burn effectively against DDoS. So it means that when blocks are full, you can prioritize your transactions to get into that block by playing a small burn. That burn doesn't go to anyone. It just literally burned and sort of effectively strengthened the network. But when you get to the level of having a truly decentralized network where every single device is a fully constructing and validating node, as it is with Minima, day-to-day transactions are effectively free. And what that also means is that for machine-to-machine activity and microtransactions, free transactions is going to be a huge benefit and a positive for users, whether that is the day-to-day average normal user, or also with enterprise clients as well. They're not going to want to have to deal with the unknown and the potentially huge cost of gas fees